This week, we only took on one new swing, which was StarBUX, not because there weren't stocks moving, but mainly due to the political climate and the expected market volatility, which required a bit more patience. Although we only took one swing trade, this week at StarBUX top of the range it still managed to provide 40 to 50% return. Welcome back, everyone, to Finesse Fridays, where I'm going to recap the swing trades for this week. Not only the execution, but also the discipline and the mindset behind them all. This week wasn't about taking on as many trades as we can. It was simply about understanding the type of market environment that we are in. It requires discipline. When volatility increases, discipline becomes even more important. Here's a quick notation. Everything in regards to our swing trades, the selection, when swings are analyzed is typically over the weekend. We understand our entry points, our risk management, as well as our targets well before the new trading week starts. And we're able to anticipate price movements for a while, meaning it can last up to that week, 2 weeks, 3 weeks, a month, several months, etc. is all based on the analysis of the underlying chart. I just wanted to make sure I stress the importance of that. So these entry points that trigger when the new week starts is all based on the prep work that was already done. What we're looking at right now is the StarBUX chart. As you can see here, there's a trend line that took place because we already traded StarBUX. And at times, these tickers, they will set up once again. And we saw a beautiful setup going into this new week, but we also had caution understanding the political climate that we are in. It causes for a lot of market volatility. As I stretch this trend line, you'll see exactly what the anticipation was. Although we came about 60 cents shy from our first take profit area, the options delivered between 40% and a 50% return off of the initial investment based on a matter of a couple days to the upside. As in yesterday's candle, the high was 102.44, and that's where those call options hit that high percentage return of about 50%. I want you to understand that during market conditions or the extreme volatility, it's not about finding as many setups as you possibly can. I understand, just based on my experience in the markets dating all the way back from early 2007, trading alongside of 2008, the extreme volatility, these are certain things and practices you have to do when it comes to staying in profits. One thing for sure is adjusting your stop loss as price move up in order to remain in profit is very important, especially during market volatility as well as market conditions as we are in right now. Many traders struggle with risk management, as we know. Not only the risk management part, but favorable entry points. Understanding how to reduce your risk during volatile markets is going to keep you in the game longer than ever. I truly believe in markets conditions like this, your stop loss should evolve with the way price is trending. You will never know exactly when the market in itself will pull back unexpectedly on you or when it will gap above unexpectedly as well. It could be based on whatever news hit the wire at any particular time. With StarBUX, especially in this market condition, it's all about protecting what the market gives you. That's the goal. As I take you back to several Finesse Fridays swing trades that I have already covered, you'll notice the break of trend lines. you'll notice that our exit is our exits for a reason. And this is one of the reasons in particular that it's important to understand what is the dominant trend you are in during the time you analyze your swings. Markets can reverse quickly. Always remember, your account capital preservation is number one. Number two is always protecting your mental capital as well. Patience, discipline, it will pay in the long run. Also, what I want you to keep in mind is that some weeks you'll have a lot of trade setups. There will be some weeks you'll only have one. But one of the things that you have to remember is that some weeks the best decision comes when you're being selective. Discipline in uncertain markets is what separates disciplined traders from emotional traders. You want to remain profitable week after week, month after month, year after year, you have to adhere to certain processes when approaching the markets. If you're now learning how to trade and you want to learn how to structure your swings, simply download our Finesse Fridays framework. It's absolutely no cost to you. The link will also be in description. For those who may be struggling, we have a wonderful cohort right now that's going on. $500 to start. It's for our Women's History Month special. You could join a group, an excellent community, and the framework, which we go into details, how we scan the markets, how we find high probability trade setups, the risk management that goes behind it, and understanding the rationale. You can simply join as well. That link will also be inside the description. The question, here we go. Did we finesse the markets this week? Yes, although the profits weren't as usual, such as 100, 200, 300, 400%, but the fact is we want to always try our best to remain green. We understand that losses do occur, but if we can prevent them by simply adhering to the process, it's our goal that we aim for and strive for week after week. Once again, everyone, happy Friday, and I'll see you during next week's Finesse Friday. Have a great weekend.